Hello, everyone, and welcome to another Wall Street from Main Street podcast. Today, we have a new guest from Elliott-Wave Trader. His name is Avi Gilburt. Avi, welcome to our show.
Thank you so much.
All right. So first off, I started following your work, I would say around 6 months ago from your Seeking Alpha blog, and I have to say the main reason I started following it is because it actually kept a lot of my overly bullish views in check. And I started to really, every week, I put you down as someone I had to read because I started liking the trading predictions, and they were pretty accurate, I would say. So why don't you, since you're new to the show, tell everyone about yourself?
Well, approximately 3 years ago, we opened up Elliott-WaveTrader.net to teach people about Elliott-Wave analysis, how to do Elliott-Wave analysis, in addition to the Fibonacci Pinball methodology that we've come up with, which is more of a trading methodology that puts a nice box around Elliott-Wave analysis to provide higher probability trades and provide you with appropriate stops and so on and so forth. So that's Elliott-Wave Trader. We started a little over 3 years ago. Now we have 7 analysts, over 1,500 subscribers on a daily basis. We, at a minimum, we have about 500-600 people in our trading room on a daily basis throwing up an analysis. In addition to the 7 analysts we have on the site, we have a lot of interaction between our analysts and our members, and it's just a really wonderful forum of sharing of ideas, sharing of trade ideas, and trade opportunities with charts and so on and so forth, in addition to the teaching of Elliott-Wave analysis.
All right. And one thing is, for people that are unfamiliar with Elliott-Wave, what is it, or is there a generic sort of thing you can give about it?
Well, Elliott-Wave analysis basically views the market as moving based on sentiment. The market moves in various patterns that is sentiment-driven rather than news-driven. Many people wonder, well, good earnings came out on a stock. Why did it tank? Well, earnings don't always move the market in the way people think. You may have a good economic report comes out and the market goes down. People scratch their heads. Well, it's not necessarily the market news that's going to move the market. It's the reaction to the news, and that's driven by sentiment. The best example was quantitative easing. When quantitative easing was coming out, everybody automatically assumed that it's going to make the metals skyrocket. Well, when we did our sentiment analysis, for example, on, let's say, silver, I think I noted a certain level that silver was going to top out at the time, and everybody, especially on Seeking Alpha, thought I was completely off the wall. We actually topped, I think, within 2 or 3 cents of my target and came down hard, which nobody expected except for us, because they thought quantitative easing is going to push it through the roof. The problem was sentiment was set up in such a way that it did not suggest that the market was going to be going up at the time, rather it was going to be going down. And so Elliott-Wave analysis tracks sentiment based upon certain types of patterns, and it gives you relatively accurate targets, both up and down, for all different markets we follow.
All right. And Fibonacci Pinball, is there a generic thing you can do on that one, or?
Well, Fibonacci Pinball is something I came up with a little over, probably around 4 or 5 years ago, when I was doing my own Elliott-Wave analysis, and I was watching how the markets moved through various specific Fibonacci extensions and retracements. I started recognizing various patterns within these Fibonacci extensions and retracements that told me relatively early on in the trade if the trade was going to be successful and where it was going to target. And it told me early enough in the trade if the trade was not going to be successful, so that losses were cut very, very small. Often We got into the trade at a Fibonacci level based upon Fibonacci Pinball. The market moved in our favor. We were able to use Fibonacci Pinball and the levels that we follow to move our stops up. So even in trades that weren't successful, a great majority of them we were actually stopping out with profits. So what it does is it provides an overall framework for our Elliott-Wave analysis and gives us excellent entry and exit points for our overall Elliott-Wave analysis.
All right. And I'll get into the, I was going to say a favorite of my topic. I'll switch topics to gold. Right now, gold, for the year, I would say it's up roughly 10%. Of course, over 3 years, it's down significantly from the 1900 target. I would say roughly 35%. It was 30% loss last year. So where do you see gold currently as a short-term basis?
Well, I don't know if you've read all my Seeking Alpha analysis, but the first article I actually wrote on gold was back in, I think it was either July or August of 2011, and I was warning people of a top in gold that I think we got within a few dollars. Now, at the time, before it even topped, I also put out certain targets that I had on the downside. So at this point, I don't believe we have hit one of my downside targets. That was where the last lows were. But based upon the patterns I'm seeing, I'm not at all convinced that the bottom is in. I think that may have just been a stopping point on the way to the bottom. So at this point in time, several weeks ago, I published other articles that were calling for whipsaws, and I've been providing the levels at which I saw the markets turning back and forth within these whipsaws, whipsaw moves. And it's exactly what we've been seeing for the last few weeks. All we've been seeing are whipsaws, and I don't believe the whipsaws are over. One of two things are going to happen. Either we're going to find a bottom within the 121 to 122 GLD region within the next couple of days, or we're going to be on our way to lower lows. So if 121 is my pivot now on the GLD, as long as the 121 region holds on the GLD, I think we could still have one more rally up as high as the 130 to 133 region before we set up for the drop to lower lows. However, if 121 gets taken out and does not hold support for that final rally up, then it tells me that we are likely on our way down now, sooner than later, to those lower lows. My ideal target has been for quite some time the 95 to 105 region in the GLD. If there's an overreaction based upon how we develop to the downside, there's an outside possibility of seeing as low as 75 on the GLD. But my ideal target for quite some time now is between 95 and 105.
All right, and in terms of so you think GLD could go to 75. In spot price, would that be roughly 700?
It would be around, I believe, the 700 to 800 region, yes. But like I said, I think that's only going to be in the event of an overreaction. In other words, some really large extensions to the downside. The ideal target region remains between 95 and 105, but we'll have to see how the market develops as we head down to that region to determine if we're going to be extending down to the 75 region. Again, I think that's a lower probability at this point. My higher probability target has been for quite some time 95 to 105.
All right, and I have a question. In terms of Elliott-Wave, you were talking about sentiment. What do you think would turn sentiment to get a bull market going again?
Well, oddly enough, it's not. There have been many studies that have been done over the last 30 years that show that it's not exogenous events that cause a change in sentiment. People think that it's some fundamental news or some fundamental event that causes a sentiment change. In fact, it's actually the other way around. Usually it's a sentiment change that causes a change in fundamentals. And like I said, there have been dozens of studies that have actually proven this. One such study had the various scientists took a group of traders, put them in a room, and told them to trade amongst each other. They gave them certain guidelines to trade amongst each other, and they did not provide any fundamental news or anything. And they did this with Forex currencies. And what the study showed was the trading that occurred mirrored movements that we see in the stock market, and specifically with Fibonacci relationships among the movements. And the scientists came to the conclusion that it's not exogenous events that cause changes in sentiment in the market. Rather, it's something that's actually hardwired within the human psyche and human beings in mass, the way they process their own feelings as a group. That's actually what changes sentiment throughout society.
Oh, that's a very interesting theory. Well, or fact. I would say probably fact, because I haven't heard that before. And my question is your long-term perspective for gold? Could you tell us that?
Yes. Once we complete this downside pattern, I'm looking at either we could see it, as early as August, but potentially even into the fall, we may be able to see that bottom being struck. If it doesn't happen by then, it could be pushed out until early 2015. But once that bottom is struck, I am expecting an extremely strong rally in the metals, the likes of which we have not yet seen. Their minimum target on gold is 25.50. Probabilities point to much, much higher than that. But their minimum target is going to be 25.50. So we're looking at doubling where we are right now.
All right. And I have a question. What is this year? The miners actually been rising much faster than the bullion. Do you believe the miners will fall like the bullion, or?
Well, there's a very interesting. It's a very interesting question. It's one we've been looking at quite deeply. We've taken apart the GDX and looked at the components of the GDX, and what we found was quite interesting. There are a number of the miners within the GDX that have bottomed, but yet there are a number of them that have not. We have all this analysis on our site, but the issue then comes in, well, has GDX itself bottomed? And that's really going to depend on how strong the decline is for the ones that have not yet bottomed, and if they're going to pull the GDX to a new low. That we cannot be sure of yet. What we do know is a number of those miners that we've been watching have bottomed, a number of them have not. How strongly the ones that have not bottomed will exert pressure upon the GDX as a whole, that we can't determine yet.
All right. And also, you've also followed the dollar. What are you seeing there?
Well, oddly enough, we were bullish at the dollar when everybody else was very, very bearish at the dollar. Let me actually pull up my chart on the Dixie. Back in, I think it was May of this year, we were actually looking for a bottom in the dollar to set up, and that was in the 79 region. We were looking for a bottom in the dollar, setting up a rally up to the 84 region in the Dixie. And that's exactly what we got. We bottomed just at 79, and we began the trek now that we're moving up to the 84 region. So I still think there's another $2.50 to go on the Dixie to take us up into the 84 region. So I do not believe that the dollar rally has yet completed. I still think there's going to be higher levels to be seen in the dollar. It may take us a couple more months, but once that higher level has been seen around the 84 region, I'm expecting the dollar to summarily, I don't know if you want to call it crash, if you want to call it take a very strong drop, but I'm looking for a move from the 84 region back down to the 75, 76 region.
All right, so I definitely agree with that. don't see much hope, but I also don't know if there will be a crash. And you also follow I would say S&P 500. I think it's the E-minis or the futures.
Right.
And I was wondering, what are you looking at that right now?
Well, it's funny. I don't know if I also write for Market Watch. I'm one of the headline writers there, and we this past week, and a lot of people didn't believe me, but we were calling for a drop from the 1970, 1980 region down to 1913 to 1933 was our target for this week in the S&P 500. And, of course, I mean, it's a significant decline, and my expectation was it was going to begin on Wednesday, which is what I put in the article. And I think I was off by half a day. I think it started Wednesday night. So at this point, we are watching to make sure that we can bottom over the 1900 region. And Monday and Tuesday are going to be very, very key from our perspective. If the market can find a local bottom and not take out the 1900 region strongly early next week, then our expectation is we're probably going to find a bottom next week and rally into September with a target of 2050 in the S&P 500, 2048 to be exact. However, if the market provides a strong extension to the downside early next week and summarily takes out the 1890 to 1900 region, we're going to find ourselves in the lower 1800s, outside chance of down into the 1750, 1770 region, from which we will then rally at that point. So the question right now is to what extent this correction will take us. Ultimately, I believe we will see the 1750 to 1800 region again. The question is, will we see it from the 2050 region in a top in September, October, or will we see it off of this current drop? We're unsure. That still has to be decided early next week.
All right. Well, I have to say, thank you for your time. I definitely appreciate the opportunity to interview you. If people wanted to know more about you or find out how to find your service, how can they do so?
Well, they can either Google me, Avi Gilburt, and that's Gilburt, or they can just go straight to Elliott-Wave-Trader.net. That's our website.
All right, and I'll have a link below this interview to his website, so you won't have to Google his website if you want to see it. So,
and we offer a free trial, so feel free to come on by.
Thank you. So I would suggest if it's free, why not sign up for the trial? So thank you for your time and coming on, and we look forward to having you back on.
Thank you so much, sir.